It's not just morning, it's a JR morning with Guy Gordon, Lloyd Jackson, and Jamie Edmonds on 760 WJR, where Michigan comes to talk.
We know this month will bring a lot of financial challenges for a lot of working families. Some are on strike. But the two other elements is that we're seeing federal subsidies for child care end. And that will could significantly increase the cost of child care for many families. Plus, we're watching them be hit again with the promised payments, what they contracted to do when it comes to their student loans. It's kind of a double whammy to the pocketbook. And Michigan Future Inc. later on this morning is set to announce some relief for those hard-pressed working families. And they have agreed to kind of give us a preview and get the horse out of the gate a little early. Lou Glazer, president of Michigan Futures Inc., joins us live this morning. Good morning, Lou.
Yeah, good to be with you.
Thanks for giving us a sneak peek at the news you're going to make today. We're talking about a working parents' tax credit. What would that do for these families, and would this be on top of the earned income tax credit that already exists?
Yes, exactly. It builds on the earned income tax credit. So the proposal is, and it's just a proposal at the moment, is for earned income tax credit recipients. So you have to work who earn at least $10,000 from work. That you would get $5,000 per child for a child between the ages of under 3, so 0 through 2, and for children that are over 3 and under 6, $2,500. So it really is focusing on lower wage working households who are raising younger children. There's about 270,000 children that would be benefited. It's hard to get the exact numbers at the moment, but probably 150 to 200,000 households would benefit from this credit. The thing that's different about this from the Earned Income Tax Credit, which Michigan just historically expanded to a 30% match of the federal credit, is that the benefit is per child. It's not a percent of the income. So anybody making from work at least $10,000 up to the maximum, which for a family of 3 is about $63,000. So if you're between $10,000 and $63,000, depending on the number of kids that you're raising, it's $5,000 per child, 0 through 2, and then $2,500, 3 through 5.
Lou, there are parents out there who are saying, child care is so expensive. I don't even know if I should even go to work. I should maybe stay home because it's so expensive.
Yes, and that's accurate. So the reason that we made the proposal, just like the original proposal we did for the big expansion of the Earned Income Tax Credit, is this is something that benefits both working families and employers, because this becomes a way of helping pulling people back in the labor force. Because if they come back in the labor force, they're eligible for this, either $5,000 or $2,500, depending on the age of their kids. So, although it's not explicitly, you don't have to use the money for child care. The assumption is that families with young children will use it for child care, which, no question, is the big expense. That's why we focused on young children. The United Way's calculation of the cost of raising kids is much higher for young children than for kids once they go to school.
Lou can't vouch for child care being very expensive.
Yeah.
The belief is that the best way to help low-wage workers is with income, not programs, right?
Yes, that's our central thesis.
Okay. And this whole thing would cost $1 billion. So from the other end, where would the state get that money?
Well, I think the argument that we're going to make to policymakers, just like we did with the Earned Income Tax Credit, which cost about $400 million when they just expanded, is this is a priority. We have tended to define lower wage workers when it comes to government as having a set of problems and then has tried to figure out programs to deal with all the problems that they're having. Our basic belief is these are sort of hardworking Americans who get up like you and me every day, and go to work. And the main problem they have is that the economy just has a lot of low-wage jobs. So why have to deal with it by having 12 different programs to help with problem A, B, and C? Why not provide them with a tax break? So we're going to make the argument that out of a state general fund budget, which this year is going to be around $15 billion, that $1 billion of that as a priority should go to help families raising young children.
Well, and then politically, this has actually found traction with both sides of the aisle, which is a good thing. But I got to tell you, Lou, so many people have a misunderstanding about what this is, and they look at it in the same bucket as welfare programs.
Right.
And, I can't tell you the number of people that have called into my show when I was doing it in the afternoon saying, well, you're paying people to have children, and this is, if they can't afford to have kids, then they shouldn't have them in the first place. Address those issues.
Well, first of all, the origin, as you and I talked when we did an interview at Mackinac a year or so ago about this, is Milton Friedman. And it was originally passed and signed into law by Jerry Ford and expanded by Ronald Reagan. This is a tax cut for working families.
It rewards work.
Exactly.
Yeah.
Period. So it is not welfare,
and it's also people paying their taxes.
Exactly.
Yeah.
I think both of those things are true, and that's why when the earned income tax credit was voted on earlier this year, it got 100 votes in the House and 27 votes in the Senate. Virtually everybody voted for it. It had a cross-sector, cross-ideology coalition of 200 groups, including most of the major business groups supporting it. This is good for both working families and for employers.
And, we're trying to attract people to the state. This
Right.
would do that for at least young workers with young kids.
With young kids, exactly. So this is like a win-win-win for everybody. And that's the reason why we're comfortable saying, look, we understand you're going to have to take $1 billion away from other things like other programs, but this is more important. The one thing I want to add...
we should point out, too, Lou, the more people you have working, the greater your tax revenues. This is one of those things that could actually pay for itself.
Exactly. Although that's always hard to do and hard to calculate, but yeah, it means... It certainly means that you have more taxpayers. Absolutely no question.
Yeah. Well, we thank you for giving us the preview and the advance look at it. Have you got some lawmakers that are already in your corner to endorse this and to carry the ball for you?
Yeah. So I don't want to sort of get out ahead of.
Yeah, but that could be risky business.
Exactly, but this is going to get introduced, so we know that for sure.
Okay, so you have a patron that will help. Well, look, if it keeps people in the labor force, you're addressing one of the number one complaints we hear when we talk to business leaders is that they can't find enough workers.
Correct.
And it also raises the issue of supporting families because we do need the birth rate to go up in Michigan.
Yeah, I was going to say our problem at the moment is we're having too few kids, not that we're having too many kids.
Yeah. Amen. Which is what we keep telling Jamie.
Well, I've done my part. I have one.
Everybody's got to do their part. We thank you so much, Lou, and we will look forward to your announcement coming up this morning and hopefully getting things moving up in Lansing with it.
Yeah, thanks for your time.
All right, take care. Lou Glazer, president of the nonpartisan, nonprofit Michigan Futures, Inc., really working hard on finding solutions to some of the vexing problems in the state. It's Eye on Engineering, brought to you by Tasian Automotive, the formula for better mobility.